right, guys, what is going on? What is Gucci gang? Hopefully you guys came in ready to learn something today. Maybe not. I don't know. We'll figure it out. Starting off with 20 people today. All right, 20. So, we'll go over some stuff today. I don't want to say it just yet, but we'll have some fun today. All right. And for those of you that are members here that have access to the live chat, you guys can ask whatever it is that you want to ask. I'm debating on whether to go over yesterday's trades or to save those for the market review. Let's put it up to a vote. Break down yesterday's trades. Yes, let's do it, or no, save for the market review. It's not just members only that can vote, I don't think. I think everybody can vote. I'm not actually sure how that works. It might be everybody. I don't know. We'll see. But that is the question of today. There is your poll, rather, right? Break down yesterday's trades. Yes, let's do it. Or no, save it for the market review. And I'll give you guys like a few minutes and then we'll make a decision based on that. All right. What is good? Felix, Eric, Eminem, Jorks, Marshall, Mason, Eberneth, Sean, Juan, Z, Martin, 2020. I think that is the chat for now. So 37 viewers, 20 votes. Let's see if we can get a few more votes on here as the people are strolling in. Right? Roger, Devin, Fernando, Marius. We are at 70-30 or 68-32 rather. It looks like we are leaning towards let's do it. I may save some of it for the market review still. Maybe. Fernando said, I kept trying to guess the silver low. Oof. Yeah. That is... You don't want to do that. Notice that retail bull flag, right? Notice where we haven't gotten past. Sometimes I get it right. But in all honesty, after that, I had no idea what was going to happen. But we are lower. Which is slightly strange because gold is higher. We'll start with that. You remember yesterday? Excuse me. Today's Tuesday. That's right. Okay. So you remember yesterday we talked about how this may have been a engineered high. And I said what typically happens around these hold levels is they'll get up to it and then they'll drop it. And so what the deal was yesterday is I was saying this sort of looks like a sell model here. Sort of. But that 4K level is up here. So for me, it's hard to distinguish whether they do want to, let's say, complete the sell model to go lower and then run it higher. But in Asia's case, I believe this is Asia in here. In that particular case, it did exactly what I told you was one of the scenarios that is likely to take place. They do, on the future side, they do tap into 4,000. They tap 4,000.1. So they do technically get to 4K, but they do not get above it. So beyond 0.1. Okay. So they basically meet 4K. They trade lower. We set up low resistance highs. Then we had slam lower during London. There's your manipulation. We really don't run out like an old low, or say like some lows down here. I would have preferred that, but to be fair, gold is stronger than silver, and this still counts as manipulation. So then what do we get? What manipulates typically mitigates. This was all during London. I was not up for any of this. Right. What typically, or excuse me, what manipulates typically mitigates, right? First leg and then good old second leg higher. Beautiful. Ain't nothing like that second leg, baby. Nothing like that second leg, dog. So, beautiful market maker buy model. And the amount of time that it took on the sell side is extended to the buy side here. And we actually meet that prior to. So, this was a wonderful market maker buy model. And this was literally a scenario that we drew out beforehand. You know what I mean? Like is that like not insane to you? You know what I mean? Like, is that not crazy to you? That we talked about this, what happened today in its entirety between Asia yesterday. Right? Because this was all talked about back in here yesterday. And then we did exactly that. Built the liquidity at 4K, ran some previous lows, and then got the run above it. Like, bro, do you guys not learn here on this channel? Drop some ones if you guys have learned something. Right, Adam, all for free. Of course. Well, there's member-only videos, of course, but I'm saying, like, the live streams are free. They're absolutely free. And they're pretty precise, too. Not all of them. I'll get it wrong sometimes. But, like, this is undeniable. Undeniable. We talked about that. Insane. So, build liquidity, sweep liquidity, and then trade to the original build-up. Like, and all you need is either that low-risk buy, or the first leg, or possibly the second leg. Nothing wrong with any of those. Okay? Nothing wrong with any of those. And there's a couple topics that I want to cover today because not everybody understands this stuff. Despite me repeating it over and over again, some people still don't get it. And that's okay. That's okay. There's a lot of things I don't get either, you know? But we'll talk about it. We'll talk about it. Devin said, great execution today. Shout out to the suspension block breakdown. Oh, yeah. The suspension block to me is cool. I think all the concepts are cool. Some of them are a little janky. There's like some things I don't use all that much, but other things I love. The suspension block, I am learning to like it a lot more. And yeah, I mean, because we've had it for all of like not even a week, I think. But it makes sense though, because it is in, or it's supposed to be in conjunction with other concepts. So it's just another tool, you know, in the toolbox. Was good, Big James. All right, so we got 48 people. What's good, Flacco? We got 34 votes, 70% said let's do it. 30% said save it for the market review. Okay. How about this? I will go over some of it, but not all of it. How about that then? Can't please everybody. So that's cool. We'll do that. We will do that. Before talking about the indices today. I tell you what, I'll save the executions for the market review. How about that? How about that, chat? Sounds good. Yesterday's market maker buy model was amazing. I'm sad I wasn't a part of it. It's okay. Look, it's absolutely okay. All right. Nobody catches all the moves. Nobody is Ash. We're not playing Pokemon here. We're not trying to catch every move, right? The law of quality, I think it's number, I don't know what number it is. It might be number 8, but I really don't know. It's not about quantity, it's about quality. One good trade is better than like 5, 6 mediocre trades. You know what I mean? And it's not always about like being Spider-Man, like trying to buy up and then sell down. I mean, that is what I did yesterday, but I rarely do that. I want to look for one good trade and leave it. One good trade, walk away. One good trade, walk away. Trying to catch every single move in here. Like, oh, we're going to buy the first stage accumulation, then we're going to do the add-on at the reaccumulation, then we're going to exit above an old high, then we're going to, you know, short the low risk short and short the first stage distribution, and then add on second stage distribution, and then add on at the MOC and shit. Like, I might do that one day just to see if I can do it, but I'm really not interested in that. I'm interested in 1 or 2 good trades, and that's it. So, but what you should do, and I'm glad this is in front of me, what you should do is print off the charts. What's funny, I sent this the image with the executions on it to a friend of mine, and he was like, bro, that shit is so clean, you should put that on the wall, you know, like frame it. I'm like, yeah, I should, but like this stuff happens all the time. I would have no more room left on the wall, on any of the walls, actually. So hopefully that gives you some, I don't know, confidence, I guess. You know, it's okay to not be a part of it. I miss moves all the time. I'm not short today. Even though I told you lower ES on Discord earlier. I didn't know we'd be tanking like how we are, but I at least pointed out regular trading hours lows from yesterday, which means I'm bearish. Doesn't mean I shorted. So anyway, the lunch and PM session yesterday. Okay. Now this is a general overview. What if I don't have a printer? Go buy one. Go buy one. Or if you have a job and that job has one, print it off there. Who cares what your boss says? Matter of fact, slap your boss anyway if you don't trade. Or if she don't trade. Lunch is here. To me, like 11 to 12 is like roughly lunch. 12 to 3. To me, 12 to 3 is that PM session. Now, I know I've said this before. I'll have to say it again. The PM session, okay, is its own session. The final hour can act as its own session. You guys get me? It's only 1 hour. It's a very short session. The MOC is a session too. It's 10 minutes, right? 10 minutes is not a long time, but it's still a session, okay? the macro view of the PM session, okay, from 12 o'clock, or some people say 12:30, do what you want, okay? But 12 or 12:30 all the way to 3 o'clock, that encapsulates the second half of the day. Now, what do you think is important when it comes to the second half of the day? A long time ago, I told you guys I much rather prefer the PM session than the AM session because of what? Why did I say those things? Why did I used to favor the PM session way more than the AM session? Think about it. Think about chronological order here. What do you have in the PM session, or even in the final hour, that you don't have? Let's say during lunch. Let's say during AM session. Let's say during pre-market. Let's say during London. Think about it in chronological order. You have Asia previous day. Well, basically you have previous days closed, then you have like after hours, and you have Asia. Then you have London. Then you have pre-market. Then you have equities open. Then you have AM session. Then you have lunch. Then you have PM session. Then you have, I can't even move over anymore. Now you have final hour and MOC. Did you guys catch all that? I like the PM session because we have that information. Going into the PM session, going into the final hour, we have what happened during lunch, what happened during AM, what happened in London, pre-market and London. You get me? So by the time we get to the afternoon, aka PM session, by the time we get to the afternoon, we have that data to work with. So guess what? If the market has built a level of liquidity, because that's what the algorithm is going to refer to, specific price levels in specific windows of time. Okay? Right, the algorithm. Okay? When we have that information, we can have now a high probability target. Clear objective, says Oscar. That's fine too. Because liquidity, low resistance highs, low resistance lows, equal highs, equal lows, those are clear objectives, right? So we know, okay, the market is likely to go there. But now it's going to come down to the timing aspect of it. So you guys are right. The AM session traders may have been knocked out already, or they're getting ready to get knocked out. You have more data to work with, Adam, and more information, like you guys are saying. So by understanding that, okay, no, you guys can see it. This is perfect. You can't see. I've refreshed my computer like so many times and it still does this. Okay. I lose my blue circle for some reason. These lows right here. Okay. The low on the right. Okay. This is the left. This is the right. The low on the right is equal to, lower, or slightly higher. What's good, Willow? The low on the right is slightly higher. See that? We could even zoom in if we need to. See that? There's a low. And that is a slightly higher low. Beautiful. Beautiful. Okay? A lot of supply and demand going on in here. Right? They're going to think when the market comes back down to this area that a double bottom is going to be support. So they're going to want to long that. And they're going to have their stops just below it. Just like I had all those skeletons on my story when I went to Walmart the other day. I was like, yo, here's all the retail, you know what I'm saying? Putting their stops below equal lows. And then what did we get yesterday? Right. Anyway, it's funny to me, but either way, that's going to be a target. Okay? That's going to be a target. Now, does that mean we see equal lows or low resistant lows technically in an original consolidation. Does that mean we just straight up short like a higher high or like this high right here? Do we just straight up short that? No. No. I mean, you can. I wouldn't. Okay. You need to wait for a little bit more information. What you know about market maker models, you know that markets do not move in a straight line. They move in what? They move in stages, right? They move in stages. Consolidation, accumulation, reaccumulation. There's going to be some sort of higher time frame concept. Now, if we're at all-time highs, obviously that's going to change. We may not have a level of liquidity to work with. In NQ's case, we did. In ES's case, we did not. ES was trash. It was weak. Seek liquidity, right? So after we have gotten, let's say, evidence that we're trading lower, once that reaccumulation has been traded through, that reaccumulation should become distribution. That original accumulation should become redistribution to go lower. So in other words, you do not short during a buy program. So you don't short the accumulation. You don't short the reaccumulation. You're not going to short, well, not financial advice, but ideally you're not going to short right before a run on liquidity. No, 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 no. Long before a run on liquidity. Not short. We short above old highs, not below old highs. You get me? Most of the time. So we're not shorting accumulation. We're not shorting reaccumulation. Can you short above old highs? Yes, absolutely. Shorting above old highs like a turtle soup or that first retracement, which is typically going to be your low risk short, that's fine. Nothing wrong with that. Beautiful RR, low risk, nice. It's banger. The distribution is fine. Redistribution is fine too. All of that's fine. As long as you're in a sell program, you can short anywhere in here. That's what some people don't get. They don't agree with that. I don't care. Literally doesn't matter. Because I don't argue with the market. I try not to anyway. But you cannot argue, okay, that this is exactly what takes place. Maybe not every day. Maybe sometimes it happens and I don't see it. Maybe it happens and it's not as clean to me. I can't see everything, okay? Even if I do see it, I may not always trust it, all right? But there's your original consolidation. Are we going to short accumulation? Accumulation for longs? Hell no. That's why you see this, okay? I'll share the execution in the market review, but you see me longing this right here. Matter of fact, it was that middle candle. That middle candle right there. Right. Why am I doing that? I don't have it up here. There was a level of liquidity. If we go back to TradingView, I can show it to you. I don't remember exactly what level. I didn't even print it out. But I do know that this was a run above an old high. So if I'm longing, or no. Sorry, this one right here. If I'm longing that, right? That is low risk, high reward. I'm longing a mitigation that is part of accumulation. We are on the buy side of the curve of a market maker sell model. Okay? I know it's a lot to take in. It's a mouthful, right? And that right there is manipulation. Let's go back to basics, okay? Basics, chat, not advanced, okay? Basics. That is what? Is that a stop loss placement or is that a target? Is that equal lows? Is that low resistant lows? Or is that high resistant lows? What is it, chat? Type it in. Let me know that you know. What is it? Is that a stop loss placement or is that a target? This was in the free beginner series, by the way. Free beginner series. For beginners, and it was free. Right? So, low, high, lower low. I'm not even really sure what it traded into here, but it does take that short-term low right there. Then we trade through it. So these up candles in here should do what? That should support low, right? That should send price higher, in which we go higher, right? That anything in here, or even right after that, anything in here is a low risk, high reward setup. At least a 1 to 2. At least a 1 to 2. Now, the tighter your stop loss, yeah, you could probably, you know, finesse that a little bit. But easily, at a minimum, 1 to 2 offered in here. And it's high probability. Because we know that those lows are going to be left open. And before they run those lows, they're going to run a opposing level of liquidity, which is going to be above an old high. So we can long that. Okay. Then we get a higher high above an old high. That to me is a very small, it ain't the greatest, but it's a very small soup. So once I saw that, I'm like, okay, I think we can go a little bit higher. I don't know, because this is all-time highs. I'm not trying to pick the high. I don't know. So I took my stop and I jammed it way up, like way up there. So it's like, okay, if it comes out or if it comes back to get me out, it's fine. So it comes back, gets me out at this third down candle here. So not the first one or the second one, but this candle here got me out. And it was like at the low end of this imbalance. Got me out right there. So, right, that was a scalp here. But now that we have traded lower and we retraced into this, okay, look up there. I'll zoom in real quick for you. I won't point it out to you, but just look at it. Look at what you know. I did share this on my Instagram story yesterday. Look at what you know about the suspension block, okay? What's that right there? We just so happen to trade up right off of it, huh? What's that right here? Think about it, chat. Let's go back to the basics again. Let's go back to the basics. We have a higher high above an old high. So is that going to be a good target? Or is that going to be a good stop loss placement? Right. That's going to be a good stop loss placement. So could we short that? We could. I didn't. To be fair, I was like, that's pretty deep in the range. I don't know about that, Chief. But we know, or should know by now, that concepts created off of other concepts are also high probability. So it is okay to forego the low risk short. Okay, sometimes I'll take it, sometimes I don't. We trade lower, right? What do we leave behind? Actually, let's go back in here. Okay, how did we get there? We had traded lower, right? Look at those up candles right here. See those two? Look what price trades into. I know it's hard to see because I drew out my line tool with what I had told you at 140, saying that ES isn't following suit, wondering if they come back for the internal range lows. right? Which I haven't talked about that yet, but that's quite literally exactly what happened. But how did we do it is what I'm trying to break down for you. Suspension block, reaction, up candles here, extend that over. Price goes right up here. And if you look even closely, you have a small one right there. I know it's blurry because we're super zoomed in here. But look at that. See that gap right there? See that gap right here? That right there is also a suspension block inside those up candles. Look at that. Look where price goes to. Right there. Right inside that. Beautifully. Okay? You can't argue with that. You can't fucking argue with that. Right there. You cannot. That's exactly what price did. Suspension, reaction, another suspension, kind of like me in high school. All right. We trade lower, and then we just kind of dilly-dally around. Right. We dilly-dally around. How can you expect that? How? How can we expect that? When can we anticipate consolidation? Huh? When? After manipulation, and we're in that first stage of distribution. Oh, okay. That's right there. Now the accumulation, reaccumulation's a little muddy because it's all kind of just blurred together. You know what I mean? But that's fine. Manipulation, low risk short, first stage distribution. You can short within that. We traded lower, and I believe, I could be wrong, but I believe one of these two was our crossing of 50%. It may have been this one. For sure it was that one, right? So then what do we have here? Up candles in a bear market. So these candles should send price where? Higher? Fuck no. Lower. Okay? Now watch this. I'm going to show you some more supply and demand concepts. Take the bodies of those up candles here. Okay? Take the highest body, draw that out. Take the lowest body, draw that out. Where does price go but close? Where does it go? Where does it close? If you took a horizontal like this, if you took a horizontal line from the high end of that body right there, we do trade above that. The bodies are respecting that. Yeah. Right. Immediately lower. Retracement into old accumulation, right? Let's go back. Back to the basics. Redistribution does what? Trades up into the first accumulation, right? To go lower. Okay. Well, if this was our accumulation, what the fuck is that? See that here? Draw a line, bam, right there to go lower. This shit still fucking works, man. Like, dog, the laws still hold true, baby. They're not my laws. I never said they were John Phibbs' laws. Okay? But this stuff works in stages. Manipulation always sets the high or the low. It never not does that. That is a truism, if you will. Manipulation always sets the high or the low. Okay? Low risk short. After low risk short, first stage distribution. After first stage distribution, second stage distribution. And then the extension lower. Okay? What time is it? This entire thing was the PM session. Now, to give you a little bit more context, we have, again, this isn't like an interactive chart on TradingView. We've been on a screenshot this whole time. But think about this. Look down here. You see that? right there. See if I can do it. See that? 11:15, which means 11 o'clock's a little bit before that. So between 11 to 12, what does that make this right here? Yes, that's low resistant lows, but more specifically, what is that? That is lunch's low. Lunch's low. That's how we know stops are going to be here. PM session, short-term bullish. There's going to be stops here. Either at that low or this one and below it. Right? So that is the context. What is the time? In here's about what I tweet, or I didn't tweet, Discord. Discord was at 1:40. So that's a little bit prior to the final hour. So you have, I forgot what AM even did. I think it made the low that got swept to go higher. I dreamed about it, which is still insane to me. But that's fine. The lows, yesterday's low of day had nothing to do with this. It was the consolidation with those lunch lows. Okay. So then like 1:30 to 2 o'clock is like leading up to the final hour. So our first stage distribution was shorting above the open of the final hour. And then 2:30, the final 30 minutes gave us one more retracement higher, right? Not going beyond those bodies. And then 2:15 to 2:45 sort of took us lower. Not all that much, somewhat. And then we got that retracement in the final 10 minutes, the MLC here. So the MLC took us a little bit higher. And then that's when we met first accumulation. This was the extension to go lower into the MOC right at the last very minute of the day. Nobody can time the market. You can't. I fucking can. I don't know about you. I may not time it, perfectly every time. But, nobody can time the market. Okay. So we just so happened to get the run on that liquidity right at 3 o'clock. Right? Everybody fucking agrees that we're shorting the market. We're going to cover right at the end of the day. That's what everybody agreed to. All the people that were long, that had stops down here, agreed that they would be allowed to be taken out of the market right at 3 o'clock. Right at 3 o'clock. Really? No. That's algorithmic. Algorithmic, bro. Algorithmic. I didn't even look at the time here, but it's like, dog, this is precision. That higher high to be a soup, that's precision. The suspension block nails that, respects it. Those up candles, respected. Suspension block, respected. First, everything I just got done telling you. First leg, second leg, MOC. Perfect. To the script, like a fucking book. Go pick up a Dr. Seuss book. You read it. You read it 2 weeks later, it's going to be the same book. One fish, two fish, red fish, blue fish. Same shit. Because it repeats. It repeats. It repeats. Over and over and over again. Time, price, and context. Time, PM session slash final hour. Price, okay? Everything I told you already. There's like normal concepts. There's some inversions in here. All type of stuff. There's that crossing of 50%. So there's that logic, right? Shorting above 50%. Shorting in a premium. Covering lower. I didn't take any partials. Well, hell, I only had one contract. But I held for that. Bull pull. No getting out early. What am I get out early for? For what? No. So, anyway, the main point that I'm trying to teach you guys here, okay, is number one is patience. I don't, can you see that down here? I think you can. See that? Patience, stillness, discipline. You would have had yesterday, you would have had to have waited for AM if you didn't trade it like the longs or whatever, you'd have to sit through lunch consolidation. I don't really trade that, okay? To say, okay, now we've got liquidity built. So that may be a target for later, but I need to wait for the high to be set. The high is set up here. Now we have a range to work with. Remember I taught you that a few streams ago? I said once you've established a range, now you can work within that. Now that the range has been established, I think it was the notes that we did with the little drop downs and stuff. And I gave you that in the Discord too, in a PDF later that day. Once the range has been established, now we have something to work with. Now we can see, okay, this is going to be the target. This is where it's not going to go. And it's going to do this, 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 and then this. In order to the T. Do I want to trade the first accumulation? Do I want to trade the low risk short? Or do I want to trade something a little bit later? Or do I want to trade both? Or do I want to trade nothing at all? That's for you to decide. That's for you to decide. Do you want to wait for reaccumulation to turn distribution? That's fine. That's fine. You have to wait a number of stages, don't you? How do you think you trade redistribution? All this other stuff has to occur first. The consolidation has to occur, the accumulation has to occur, the reaccumulation has to occur, the manipulation has to occur, the low risk short has to occur, the first distribution has to occur, then you get redistribution. That's a late stage. It is. It's a later stage. Still a good stage though, because that's the final run to liquidity. That's going to be your fastest move. Okay? Now, I've taught you this already. Actually, let's go back to that. I've taught you this already. When it comes to stop loss placement, okay, there is a plethora of options. You have a lot of options, okay? If you're trading the low risk short, it can be the manipulation high, okay? If you're trading, let's say the first leg of, or the first stage of distribution, it could be the low risk short high or just straight up the manipulation high. Or if you want to dumb it down some, if you're trading the first stage distribution, the stop can go to the high end of the reaccumulation. Because if the distribution is going to respect the reaccumulation, it probably shouldn't trade to the high end of it. Okay? It's going to be the same thing here. The redistribution should not go to the previous stage high. It definitely should not go. It can, but it really shouldn't go to the high of the first accumulation. And then after redistribution, you can add or trade the MOC. I would say if you're going to do that, the stop would probably go to the high end of the redistribution. Now, if you do that, don't hit my inbox with some, John, this RR sucks. I don't know what to tell you. Okay? You're trading the last possible 5 minutes, 10 minutes of the fucking day. What do you want from me? You know what I mean? But anything in here is worth it. So think about that. Think about that. Does the market, right? If this is our accumulation to go higher, okay? If we're marking out this range right here, this high to that low, when that low here was met right there, okay? If the stop was at the high end of that, that stop's going to be up here. And the lows are down here. So you may get, at best, probably a 1-to-1, maybe a little bit over. You know what I mean? So, yeah, that's a 1-to-1. That's also very high probability, too. You may not like a 1-to-1. Don't take it, then. Simple as that. Oh, John's teaching 1-to-1. Okay, well, don't fucking trade it, then. I'm not telling you you got to trade it that way. But what do you expect is going to be left for you? Think about a loaf of bread, okay? Think about a loaf of bread you bought on Monday. That's manipulation. Because once the high has been set, everything becomes a short, right? Okay, so you made brunch the next day, some avocado toast, okay? And you used 1 or 2 slices of bread. Suspension block, another slice of bread. Up candles, another slice of bread. First stage, slice of bread. Crossing at 50%, shorting some up candles in here, or there's a gap up here too. I wasn't going to point that out, but that's up there. Okay. Now you're using loaves of bread, or out of that loaf of bread, you're using pieces and pieces and pieces and pieces. Bam. You had a cookout. Everybody came over, made barbecue sandwiches. Okay. And now a lot of that loaf is gone. Now you're down to like literally not the MOC, possibly. If this is the MOC, you're in the last 10 minutes of the day and you're in the last stage. This is your last piece of bread. Or this is that piece on top that has all crust on it that nobody touches. You don't touch it. You kind of like move that to the side to get to the other pieces of bread. And you just ignore that top one. Don't act like you don't know what the fuck I'm talking about. That's what you're left with here. You know what I mean? The entire loaf, baby, is gone. You've got one slither of bread left. You're getting crumbs. So you can't complain, oh, well, we can't get a 1 to 5 or some shit. I mean, you could, but you're going to be having a tighter stop. You know, if you want that imbalance, maybe, and you want to put your stop at that, okay, yeah, that's going to be a 1 to 3, 1 to 4, or something like that. Sure. But like, come on, man. The biggest piece, the best pieces of bread, okay, is going to be that low risk short or the first leg or anything in a premium. Once you get into a discount, once you're shorting inside of a discount, yeah, your bread's not going to be as fresh. It's not going to be as nice. So the RR may water down, but that doesn't mean it's not tradable. Okay, so drop some 2s in the chat if you guys learned something today. We spent a lot of time on this chart, but for those, I guess, that may not have all that much experience with market maker models, are you guys seeing how this stuff works? These are just pieces. Every concept is a piece. Every stage is a piece, but the entire piece tells a story. I read a book the other day, The Dispossessed. There's 360 pages. If I read 2 pages, skipped 3 chapters, read another 5 pages, skipped to the end, and then read the ending, do you think I would know anything about that book at all? I wouldn't know very much, would I? I'd be like, well, who is this and how do we get here? I don't get it. Right. And that's what traders try to do when they work with just a piece. Just one model, just one particular concept, just one, type of target, or I'm only going to trade one particular session. You're trading with one piece, trying to make an entire puzzle. That's why it doesn't go well. You get me? So, I mean, it's the same thing here, but in reverse. Highs, distribution, right? Let me bring this back, sorry. Okay. The retracement to go lower, right? So there's your manipulation. Next candle is your low risk buy. It's kind of hard really to label this personally. I would say this entire thing here is the first accumulation, and then this here's the second stage to go higher. But you can see what I'm talking about when it comes to stop loss placement, right? You see this level of distribution? If we mark the high, or excuse me, if we mark the lowest end and the highest end of this consolidation here, okay, you see that? I would include that. I wouldn't include that because that to me is where all the bodies are. Okay, but watch this. You remember what I just told you, right? If you're trading one stage, the stop can go to the previous stage's high if you're short, or another stage's high end, right? So watch this. If distribution, right, because we left it back into it to go lower. if that is going to be accumulation, reaccumulation technically on the buy side, then that is tradable, and you can put the stop at the low end of that. You see that? Stop at the low end, right? Entry at the high end. There's not even a concept there. There's not even a concept there. But yet that gives you a nice up to those highs, one to 1.5, a little bit above that to sneak into 1 to 2, and there it is. That is trading the second stage of accumulation. That's if you missed the manipulation, the low risk buy, anything in the first leg or the first stage in here. That's if you didn't trade anything in there. You missed all the 1, 2, 3, 4, 5, 6 opportunities. This is one of the later ones. Doesn't mean to avoid it or that it's not worth it. A 1 to 2 is fine. It ain't the greatest. I can agree to that. It ain't the greatest. Manipulation and the low risk buy are going to be your best RR to me. But that doesn't mean you can't trade late stage. Doesn't mean that at all. So that is what I wish people would understand. Okay? That's what I wish people would understand. So with that, I think we'll cut it here. We've talked pretty extensively about a lot of what has taken place, or sorry, what took place yesterday. Okay. Oh yeah, this is a bear flag. One of you mentioned that. This is gross. This is horrendous. Yeah, I don't like this at all. This is cheeks. But you know what though? I'm not surprised. Look how we started the day. Well, look how we started yesterday, first of all. And then look what we did today. We gapped higher, and then we have a what? Higher high above an old high. That's a turtle soup right there. It's a turtle soup right there. Now, what would the target be? Oh, I have no idea. I don't know. Like, literally, I didn't know. The only thing that I targeted was the target that I told you was those right there. That was it. Okay. I figured the market may do that. I have our opening range gap here. We trade to the low end of it. We go back into a premium. The premium sent that immediately lower. And it's like, okay, yeah, we're going to run those lows now. But I had no expectation whether this was going to continue lower or whether that was going to be a reversal to go higher. I literally was like, I don't know. I have no high probability bias after that. I don't know. Okay. You want one more? Unless I deleted it. Did I delete it? Damn it. I think I did. There was something really cool I had on here, and then I think I deleted it right before the stream. Wow, that makes me sad. All right, I guess that's it then. Maybe I'll figure it out and send it to you later. But wasn't the triple Qs, was it? Nah, it wasn't that either. Okay, yeah, I guess that's it then. All right, that'll be it, chat. I don't have any thoughts on dollar. I don't know what to do with it. I don't know. I really don't. It's been janky. It's responded off some daily concepts pretty nicely, but as of where it's at right now on the daily, I don't know. I don't know if it's bullish or bearish. So I don't know. It's a coin flip to me. So I'm not going to make any comments on that. So, but thank you, Dark Joker. Appreciate that. Y'all be good. Be blessed. I will put out that market review later this evening. And this might be a bear flag that actually works. So that would be shocking. That would be shocking. So it seems like I think this was Sunday's gap.
is being a little bit responsive here, and we do have some lows here, so we may not have made a low of day. But in all honesty, I'm really not interested in today. I'm not interested in this. You know what I mean? It's obviously a down day. I really don't see a reason to long. I'm gonna go read. You know what I mean? This is not a good day for me to press buttons. So that's it. But yeah, y'all be good, be blessed, and I'll see you tomorrow. Same time, same place for the same price. See you tomorrow.